Well, welcome to this session about market makers, ECNs, and after-hours trading. Now, I started trading in the mid-90s, and it was a completely different place. Now, trading was the same. Trading was supply and demand, support resistance. It was the same, but how the market worked has really changed since I started. And I had lots of theories. I had lots of, well, let me call them conspiracy theories about the market makers and how the market makers and the markets were rigged. And yes, they are rigged, but not in the way that I thought they were. And so this is one of the questions I have received a lot over the years about, okay, how does after-hours trading work? The market makers, do they manipulate the markets? And we did this session about 5 or 6 years ago, and it was very interesting, and it actually helped answer a lot of those questions. So while this is definitely not necessary for anyone to know to make money trading, I mean, you need to know your charts, you need to know your money management, you've got to have your system and strategy down. This is one of those things that it's good to know. It's nice to know, and it's interesting to know. So let's take a look back at how markets worked. People have been buying and selling shares of stock for really over 1,000 years. However, there's really no formal exchange, especially we're going to talk about here in America. And the first place that I think stock was traded was in the Netherlands. I think that's the first stock that actually was bought and sold. And in New York, people would meet under the buttonwood tree. So on Wall Street, there was a buttonwood tree, and people would show up there to buy and sell stock. And it became more and more popular, and as more and more people started to get into investing, more people started to show up. And so then people started to say, look, you don't need to travel all the way to New York to meet under the buttonwood tree to buy and sell stock. I can do it for you. That was when the very first stockbroker was created. And the stockbrokers would meet under this buttonwood tree. And in 1792, they actually wrote an agreement. And the agreement was that number one, you had to be one of the brokers. If you were the public, and if you came to the buttonwood tree, no one would talk to you. No one would trade with you. You had to be one of the brokers. So they signed this agreement that you could only deal with other brokers. And then, of course, they charged commissions. Now, that agreement, the brokers were only to deal with each other, is still in effect. It's actually still in effect. So on that exact same place, we have the New York Stock Exchange on Wall Street, and it is still the same way. In order to go into that building, you need to be a seat holder. Now, you can be a guest of a seat holder, but if you want to go in and actually buy and sell stock, you must work for a company that owns a seat on the New York Stock Exchange. So they've bought that seat, they pay yearly dues for that seat, and that gives them access to go onto the exchange trading floor and buy and sell stock. If you are not licensed, if you do not work for a company that has a seat, or you don't own one yourself, you cannot get into the New York Stock Exchange. You can't. So as you can see here, it still works the same way. If you want to buy and sell stock, you cannot go into that building. You must go through a broker. Just like they signed back in 1793, you must go through a broker. So this is how the New York Stock Exchange works and how it's evolved. And we're going to talk about some of the changes in the last 20 years. But before, the public was not allowed access to the New York Stock Exchange. You had to go through a broker. So 30 years ago, if you wanted to buy 100 shares of General Electric, you had to go hire a broker. Someone who works for Morgan Stanley, Merrill Lynch, someone like that, and you would actually call them up, or you'd go into their office and say, I would like to buy 100 shares of General Electric. Now what would happen would they say, great, so you call into the broker. The broker actually, let's say you're in Kansas City, would make a call to his trading desk. And his trading desk would call, I didn't put this on here, but they'd call one of their runners, or they'd call one of their traders. If you go to the New York Stock Exchange, there's tons and tons of phone booths all over. There's phones all over. And so the broker, Morgan Stanley or Merrill Lynch, they call their trader or their runner, and they say, okay, we have an order from one of our clients that wants to go and buy 100 shares of General Electric. So what happens is this runner literally goes over to the desk where they buy and sell General Electric. So somewhere inside the New York Stock Exchange, you have these desks. Now these desks sit what are called the specialists. The specialists. We're going to talk about who they are and what they do. But the runner or the trader will run over and they want to buy 100 shares of General Electric. Now they will buy this from the specialist. Now the specialists, they are in the middle. They are simply in charge of order flow. Now understand that on the other side, the same thing. If you wanted to sell 100 shares of GE, you would have to call your broker. That broker would call their floor trader, their runner, and he would go to the specialist and sell 100 shares. The specialist, their job is to match up order flow. Now, people always ask me the question, Rob, what if I go to sell my stock or my option or my bond or whatever it is, and no one wants to buy it? Well, that is not a concern because of the specialist. The specialist must fill the orders. So if your order came in to buy 100 shares of GE, and there was nobody calling their broker on the other side to sell 100 shares of GE, the specialist will still fill this order. They will still fill this order out of their inventory. They're allowed to be long, they're allowed to be short, and then that's their business. Now, of course, they're allowed to make money, the specialist is. That's where the bid-ask spread comes in. The bid-ask. So this is where the specialists make their money. So again, they're buying it at $27.90, and they're selling it for $27.92. So they're just trying to get as much order flow at the bid and ask as they possibly can. Now, yes, sometimes they have to, they try to be at zero as far as position goes, but sometimes they have inventory. Sometimes they're long, sometimes they're short, but they're good at managing their business. So this is how the New York Stock Exchange actually still works. They're specialists. We'll talk about some of the changes, but this is how it works. That literally we still have people on the floor walking over, talking to the specialists, throwing up the hand signals of how many shares they want. That's how it still works. In 1978, I believe, the NASDAQ was created. Now the NASDAQ does not have an actual trading floor. If you watch CNBC in the morning, they're always live from the NASDAQ. That's kind of silly. It's ridiculous. The NASDAQ trading floor is actually a very small room in Times Square. And if you've gone to Times Square, you can peek in the windows, and what they have is they have a lot of cameras there, a lot of television cameras, and they have a big wall of screens, but there's no trading that's done there. The trading is actually all computerized, and the computer servers are actually in New Jersey. So if you want to say if the NASDAQ does have a place, it's New Jersey in a server, in a bunch of computer servers. But everything is now electronic. So the way the NASDAQ works, it's a little bit different. It still works the same way. To trade on the NASDAQ, you must be a broker. So if you are not a broker, you must hire a broker. Same thing. Let's say you wanted to buy 100 shares of Intel. Intel, yeah. Okay. 100 shares of Intel. You'll call up to the broker, And now again with electronic trading, you'll simply go on to etrade.com, thinkorswim, wherever, and you put in, I want to buy 100 shares of Intel. It's still going through the broker. Now in the NASDAQ, there is not a specialist. They set it up a little bit differently. They set up what are called market makers. Now essentially they're the same thing, except all the market makers are competing against each other for order flow. In the New York Stock Exchange, there's one company. One company is a specialist. That's what they do. That's their job. And they get all the order flow on GE. In the NASDAQ, the market makers are basically competing for order flow. So all of these companies out here, Goldman Sachs, Knight Securities, Barclays, Morgan Stanley, they all have market making divisions in their company. And their job is to buy and sell stock. So your 100 shares, it's going to go out to the NASDAQ, to the market makers. Now the market makers, they decide who grabs their order. So if your order goes out that I want to buy 100 shares of Intel, Merrill Lynch might see that order and go and fill it. They might go and fill it. However, if Barclays gets there first, Barclays gets the order. They'll go and fill it. Now every single one of these market makers must show their best bid and best ask. That's the rule. So what that means is that Goldman Sachs on Intel, let's say they're showing $22.15 by 22.20. And let's say Merrill Lynch is showing, again I'm going to put Goldman Sachs here, GSCO. Merrill Lynch is at $22.16. I'm going to put in MSCO. Sorry about my chicken scratch here. And let's say they're selling at 22.21. And let's say Knight Securities, they're selling it at 22.17. What's happening is we're actually building a level 2 quote here. For any of you that have ever heard of level 2 quotes, this is simply what it is. It is a list of all the market makers, what their best bid and best ask is, and how many shares it is. So if we take a look at this, again, the list will go all the way down. There's hundreds of market makers on each stock. But if you look at this, if we looked at our computer screen and we say, what is the quote right now for Intel? The best bid is Morgan Stanley. They're at 22.16. The best ask is 22.17. And that is a company called Knight Securities. And it'll show you how many shares. So let's say Knight Securities is selling 1,000 shares and Morgan Stanley's buying 500. Each company needs to show how many shares they intend to buy. So for the only way for this stock to go higher is that someone needs to come in and buy 1,000 shares from Knight Securities. This is what they're advertising. They're advertising, I'm selling 1,000 shares. Once that 1,000 shares gets filled, the ask will go up to 22.20, where the next market maker is, which let's say that's Goldman Sachs, and they're selling 2,000 shares. This is what a level 2 quote is. For those of you who have heard it before and didn't understand, this is simply a level 2 quote. It's all the market makers, their best bid and their best ask. This used to be a fairly valuable tool to use when I first started trading. I actually used a level 2 screen because you could actually see what's called the depth of the market. You could see that if Goldman Sachs was sitting out there with let's say they're sitting out there with 300,000 shares on the bid, you knew that this stock probably wasn't going to go down below that point. I mean, that was a huge bid. And so people would go and get in front of Goldman Sachs. And they would actually try to jump in front because they knew that Goldman Sachs was in there buying a bunch of shares. When level 2 stopped being worthwhile, I still get this question from people about, oh, should I get level 2? It's totally not, it's not even usable anymore, because now everyone hides their orders. And that's what the market makers started to do. So if Goldman Sachs really wanted to buy 300,000 shares, let's say that that's what they wanted to buy, do you know what they would do? They would come over on the ask and they'd put out an order and they would show that they wanted to buy 500 shares. Then they'd show up over here on the ask with 2 million shares. So if everyone saw that, if people who were looking at level 2 saw that Goldman Sachs all of a sudden came to the market with 2 million shares to sell, what do you think people did? Well, they tried to get in front of it. So they jumped in front and they started selling short because they thought, oh, Goldman's in there selling. Well, Goldman really wasn't in there selling. They were in there trying to buy. They needed to buy 300,000 shares. Once they got filled, they canceled their order on the ask and it went back to normal. So now there's so many computer programs out there that can hide orders. It really doesn't make a whole lot of sense. One of the other questions I get too is one of the very first trading books ever written, and it's actually a really interesting read. It's totally outdated and doesn't even matter anymore. It was called the SOS Bandit. Now the SOS Bandit, SOS stands for Short Order Execution System. It's only on the NASDAQ. And the way it works is that I just showed you the bid and ask. I just showed you a level 2 quote. If you use the SOS system, and there was an actual button on my software where I actually could send the order via the SOS system. What happens is when you use that SOS system, you automatically went to the front of the line. So if there were all these institutions that were trying to buy and sell, and you hit SOS, your order actually went to the front of the line. You were guaranteed to be filled before the other institutions. Now the rule was it had to be less than 1,000 shares, and you could only use it once every like 5 minutes, I think. And it was only for the small investor. They created it as a way to give the small investor a way to get their orders filled faster. And the book talks about how, just what I talked about, you'd see these big orders on the bid and ask, and small traders would use the SOS band or the SOS system to get their orders filled before the big guys. And like I showed you, if you knew that Merrill Lynch was in there buying 1 million shares and you could get in before they did, and you knew there was a 1 million share buy order behind you, it would be pretty easy to make a couple pennies at least on the trade. Again, this is stuff that's so old and outdated. It's just very interesting. I think it's fascinating. I love to talk with old-time traders who know about this stuff, because I remember hitting the SOS button. I remember using it, and very, very interesting. So on the NASDAQ, we have market makers. On the New York Stock Exchange, we have specialists, and their job is to make order flow. Same thing with market makers. If someone comes to the market and they want to buy shares, one of the market makers must sell it to them. They must honor their best bid and best ask. So this is really how the markets have run for a long time. Once we got into the digital age, and we got, we had the internet, and we could start doing this on our own, and we didn't need a broker. There were companies that popped up, and these companies were called ECNs, Electronic Commerce Networks. And these ECNs, before, if you wanted to go buy and sell stock, you had to go to the NASDAQ. If you wanted to buy Intel, you had to go to the NASDAQ. You had to go through a broker, and the broker had to send the orders to one of the market makers. Once these ECNs came around, the market that was just the NASDAQ actually became much bigger. It encompassed all of these ECNs, Electronic Commerce Networks. Now what these ECNs did is they basically did the same thing. They let you, well, I shouldn't say you still had to go through a broker, and to this day you still have to go through an E-Trade, a Thinkorswim, a TD Ameritrade, a Charles Schwab, someone, you still have to go through a broker. But all of a sudden, you could send your order to somewhere like Island. And so Island also had their own book. So on Intel they had $22.15. They had the next bid was $22.14. The next bid was $22.11, and the ask was $22.17, $22.18. And so all of these books, if we went down to Instinet, they had their own quotes. The best bid on Instinet was $22.14, and the best ask on Instinet was $22.20. And all of these ECNs would have their own basically books or their own set of orders sitting out there. So just like the NASDAQ, we had market makers sitting there on the bid and ask. All of these ECNs now started to get orders from people like you and I. So we would go out and put in an order on Island. Hey, I want to buy 100 shares of Intel on Island. And so my 100 shares would sit out there, and if anyone else came to Island and they wanted to sell 100 shares, if I was the top bid, which right here I'm the top bid at $22.15, if anyone came to Island to get filled, I got filled. We no longer had to go through the market makers. You and I could actually put our orders out on these ECNs, and we would get filled between each other. Now, technically, Island was the exchange, but now this is what's called direct access. If you ever heard that term, a direct access broker, this is the first time we got direct access to actually buy and sell with each other. Now, yes, we still had to go through a broker, like an E-Trade or a Charles Schwab, but you and I could actually buy and sell stock through these ECNs. Now, these ECNs, they started eating up all the margins of the market makers, and I really love these ECNs because when you put in an order that goes out to the market makers, or at least when you did 20 years ago, that order would sit there. The market makers technically had a minute to fill your order. That's how long they had, and when you wanted to make a quick trade, that minute was a long time. When the ECNs came around, this order was instantaneous. If I saw that there was someone out there on Island at 22.17 on the ask, if I hit that buy button, it was instantaneous. Direct access, very, very quick. So the way that this all has changed now, and now there's more than 50% of the volume is done on ECNs now. Most of the trading is done on ECNs. This totally changed the game to where the speed was great. What we saw was the spreads come down substantially. You know, the market makers, they made a lot of money off of being market makers, and once we went from 25-cent spreads on stocks to 1-cent spreads on stocks, there wasn't as much money to be made. And so for us as the trader and the investor, it was fantastic. Fast executions, tighter spreads, more guaranteed fills. This was just the best thing. However, when I first started out, this was just the birthplace of the ECNs. When I built my order, I actually had to say what exchange I wanted to go to. So right now as a trader, it's actually quite simple. You say, oh, the bid is 22.15, the ask is 22.16, you just hit buy. When I started trading, you had to go in and see who had the shares available, who had the best price. So if I took a look up here and I looked at my level 2 screen and I could see all the market makers on the ask and all the ECNs on the ask, I would see that, okay, Island has 500 shares for sale at 22.17, and that might be the best. Now if I wanted to buy 1,000 shares, well, that's not available at 22.17. So I would have to go in and plan, okay, maybe I needed to go to ReadyBook to get my 1,000 shares. If I wanted to be guaranteed to get 1,000 shares, if I sent my order to Island, I would only get 500, and then I would basically, the bid would turn into 22.17 for 500 shares, and I'd have to wait. But if I wanted to be guaranteed 1,000, I would have to say I want to send my order to ReadyBook. And if I clicked the button and I was the first one there, I would get those shares. So you would actually, there's one more step of trading. You had to see where the shares were available, who the market maker or the ECN was doing it, and you had to route your order to them. So putting in orders was actually a big deal. One of the new companies, and I say new, this is actually quite old, but ARCA, they were the first one to develop what was called smart order routing. And it was really, really cool. Wait, before we get into smart order routing, all of these other ECNs, let's talk about after hours trading. So people ask me, okay, how does after hours trading work? The NASDAQ and the New York Stock Exchange, they open at 9:30 Eastern Time and they close at 4 p.m. Eastern Time. You cannot make a trade on the NASDAQ or the New York Stock Exchange outside of those hours. They close. The market makers do not fill orders after 4 p.m. However, these ECNs had different hours. So Island was open from 8 to 8. Island was open from 8 a.m. to 8 p.m. So if you wanted to trade after hours, let's say after hours Intel announces record profits and you want to buy the stock, you can't go to the NASDAQ. You have to go to one of the ECNs. And Island's all open all the way till 8 p.m. So this is how after hours trading is even possible, is that these ECNs have different hours. Nowadays, these ECNs are open 24 hours a day on the most heavily traded stocks. You can literally go and buy 100 shares of GE at 3 a.m. if you want. Go knock yourself out. The spreads are terrible. It's not a good idea, but you can do it. And I would imagine that at some point in the future, all trading is going to be 24 hours. Not on the exchanges, but on these ECNs. They'll just trade all the time. So these are open depending on their times. Some of them close. Some of them are open 24 hours a day. But this is how you can buy stocks pre-market and after hours, is that it's not off of the major exchanges, it's off of one of the ECNs. And again, if they put up a bid and it's open, you can go and approach that order and take it at any time as long as it's open. As I said, it was definitely very difficult when I started out, because you not only had to learn how to read a chart, you not only had to learn all the stuff that we need to learn in order to make money trading, but we also had to learn about routing your orders. Okay, looking at the level 2, where is the orders, and whenever there was a very fast moving stock, you would look like really deep into the ask. Okay, I know I'm not going to get the first 5 or 10. I'm going to go after number 11. I'm going to go after Morgan Stanley. They're selling shares a little bit higher than where the market is, but I know I can get those shares. A company called Archipelago. And Archipelago actually went back to their offices back in 1997. I cannot remember the name of the company. I'm going to have to look that up. But they were in Chicago on Wacker, and they were the first ones to create what's called a smart order routing. A smart order routing system. And it actually was the greatest thing that ever happened. So what happened was with ARCA. ARCA was its own ECN. But they actually made a program. So let's take the bid at ARCA. Let's say the bid on ARCA is $22.15. And the best ask on ARCA is $22.20. So if you go to ARCA, this is what the price would be. and it just worked like a regular ECN. But they actually made a program where if you put in an order in on ARCA, the first thing it would do, it would check against ARCA. So if I put in an order to buy Intel at 22.17, that's between the bid and the ask. So the first thing that would happen would be that I would pop up in ARCA's order book at 22.17, and I'm looking to buy 1,000 shares. The next thing they would do is they would actually go and check all the other ECNs. So if Island had, let's say Island's bid was 22.17, 22.16, and let's say their ask is 22.17. I put in my order to buy 1,000 shares of Intel at 22.17 on ARCA. Now at ARCA, there was no sellers at 22.17. But over on Island, there were sellers at 22.17. So ARCA would route my order over to Island and get me a fill. It would actually send your orders out to all the ECNs. All the ECNs, and if there was any one who was selling stock at 22.17, it got filled. And this order was very, very fast. So the first place it checked was ARCA. The second place it went were the ECNs. Now, if there were no ECNs that had shares at 22.17, the next place it would go would be to the market makers. So then it would route to the NASDAQ to see if there were any market makers that would take that order. Once they created this, it was so much easier to put in an order. You just hit buy with ARCA. Buy ARCA. And what would happen? It would automatically go out, check the ARCA book, check all the other ECNs, and send the order finally to the market makers to the NASDAQ. No longer did we have to choose where the routing was going to go. ARCA did it all for us. Now, of course, this was revolutionary. This was amazing. And every single person, every single brokerage now uses something like this, smart order routing. So when you hit buy and sell now on your stocks, your options, your futures, whatever it is, everyone's using smart order routing. And it basically goes out to all the exchanges, all the ECNs, and gets you the best and quickest fill that it possibly can. So again, much, much better. So as we talked about, everything we've talked about today, wasn't really, you didn't really need to know it. And again, it has nothing to do about trading, has nothing to do about chart reading, but it has to do with about how the market works. And hopefully this is giving you a little bit deeper understanding. I'm a big believer in understanding everything, and it's a little bit of a curse of mine. When I go to a doctor, I'm like the most annoying guy to doctors. I'm like, okay, how does this work? Why am I taking this pill? I did some research and it says that this might be better, and I have to know everything. My wife will go to the doctor and she'll come home and I'm like, okay, what did the doctor say? She's like, I don't know. You don't know? Well, what do you say? Well, I'm supposed to take these pills for a month. What pills? I don't know. What do they do? I don't know. And it drives me crazy. It drives me crazy that she can just, it's probably much more enjoyable to live your life like that, just carefree. But this is one of those things that, again, it really helps you kind of understand when you do hit that button, when you do hit that buy and sell button, to understand what's really happening with your order. And all the computer programs now, they're going to get you the best available price at the moment you put in your order. So there's no need to worry about, okay, does E-Trade give me a better fill than Ameritrade? No. They use the same internet, they use the same programs, the same speed. And so when it comes to execution, it's really not that big of a deal. Smart order routing is used everywhere. Now, some of the changes we've seen over the last 10 years is the markets are becoming more electronic. And we took our Maverick group 2 years ago, well, it's 3 years ago now. We did our summit in Chicago, and we did it in the Chicago Board of Options Exchange. We actually rented out a room in the CBOE, and our traders went down. We went down on the floor. We went to the S&P pits. It was really cool, but it was also a little bit depressing. The first time I went to the Chicago exchanges was back in the late 90s. And there were thousands of people on the floor, and there was lots of activity. And the traders I talked to down there, they even told me, oh, it used to be much busier than this. Electronic trading is really starting to cut into the business, where a lot of the traders said, I can just do this at home, or I can just do this, a couple days a week and do the rest elsewhere. When we went back there 3 years ago, it was almost depressing, to where I would say that 10% of the building was even being used. And everything has changed so much to be electronic trading. And at some point, these exchanges, like the New York Stock Exchange, are more for advertisement than actual function. For example, they made a rule years ago. About 10 or 12 years ago, the New York Stock Exchange bought Archipelago. So that's why you actually will hear the NYSE called NYSE ARCA. So they bought the Archipelago program and the platform, and they made the decision at that point, all orders under 10,000 shares will not be touched by a specialist. Everything goes through Archipelago. Everything goes through the Archipelago ECN. So nowadays, if you put in any order and it's a stock that trades on the New York Stock Exchange, it's guaranteed to go to an ECN if it's under 10,000 shares. And I think they've even bumped that up to where now the specialists are only handling the big block trades, and everything else is being done electronically. On the NASDAQ, the market making business has really gone away. Yes, all those companies still make markets, but it's no longer the kind of money machine it was back in the 70s and 80s. Now most orders are routed through ECNs, and everything is done through the smart routing that we just talked about. So for us, it has been fantastic. For the Wall Street firms, it hasn't been so great, but I don't know about you, but I'm pretty sure you don't feel sorry about them like I do. They're still fine. But for us, it's become so much better. And over the years, just the technology, the speed, the spreads, it is so much better today than it was when I got started. And so much more easy and simple to be a trader than it was when I got started. So all these changes have definitely been for the best. Now, yes, we can't get into all the electronic trading that's going on now, and we could probably talk over a couple of drinks about high frequency trading and those firms that are doing that. Any of you have read the book Flash Boys by Michael Lewis. Talks about how those firms are using really what we just talked about here to get an advantage over everyone else. They've really figured out these smart order routing systems, and they've learned how to get in front of the line. They learned how to beat them. They learned how to jump in front of you and I, get the share for a half a penny cheaper, and turn around and sell it to us because they knew we were coming to market. That's really what this high frequency trading is all about. Is they see when orders are coming in to buy, they jump in front, they buy, and then they turn around and sell for a half a penny more. But I would say overall, I'm very, very happy to see the changes that we've seen with these ECNs, and no longer do the market makers control much of this market. Where in the end, they used to be able to get together and collaborate and collude and say, hey, let's drive this thing up, let's drive this thing down. Now it's just not possible. So whenever I talk to a trader and they tell me about the darn market makers are manipulating the stock, I always say, nope, that was 20 years ago. Right now, it's really all about just this mass order flow coming in through electronic exchanges. All right, thanks for joining me. Hopefully you found that interesting, and happy trading.